Okay, future-proofing, building resiliency and strength for 2025 and beyond. My name is Kristen Biermeyer. I'm the Director of Marketing for Wegner CPAs, and I'll be your moderator today along with my teammate Fallon Morrissey. Before we begin, this webinar is being recorded and it will be emailed to you after the event today, along with any resources that are referenced during the session. We appreciate the questions that were submitted in advance, and we'll also have a dedicated Q&A session at the end. So please continue to submit your questions throughout the presentation using the Q&A feature at the bottom of your screen. Fallon will be monitoring that and will address as many of them as possible as time permits. Our goal today is to explore strategies for nonprofit financial sustainability and resilience amid shifting economic and regulatory landscapes. By the end of the session, you'll have some practical tools and insights to strengthen your nonprofit's financial future. To get us started today, let's look ahead to 2025. I'm thrilled to introduce our panelists who will each share a brief perspective on what nonprofits should be preparing for. Panelists, if you could please introduce yourselves and in about 15 to 30 seconds answer this question. What do you see as the single biggest game changer for nonprofits in 2025 and why? And to get us started off, I'll call on Mitch first.
Well, great. Good morning, everyone. My name is Mitch Davis. I am a partner in our assurance department, and I am based out of Milwaukee, Wisconsin. I've been with Wegner for 17 years and have experience with nonprofit audits and reviews, preparing nonprofit informational returns, as well as providing various consulting services to nonprofits. I also specialize in nonprofits that receive government funding and are required to have audits in accordance with either the uniform guidance or various state requirements or the government auditing standards. And then to answer your question, Kristen, for me, I think the biggest issue facing a lot of the clients that I work with this year is going to be the uncertainty around government grants and the new administration this year. In addition to that, there's also the new uniform guidance that is in effect. And the transition between the old and the new requirements is complicated. And in many cases, I think it's going to be, you're going to have to look at your grants on a case-by-case basis to determine what you are required to comply with. So all of that is going to be challenging. And I think my biggest piece of advice is a lot of communication with your auditing firm and your auditor, just to make sure that you can discuss potential issues or problems that come up throughout the year to try to make sure that your audit goes as smoothly and efficiently as possible.
Thank you, Mitch. Let's hear from David next, please.
Thanks, Kristen. Yeah, my name is David O'Dell. I'm a senior manager, coming up on 30 years with the firm. My role with the firm is more internal, so not directly dealing with clients. I'm a leader in our quality control function. So my primary responsibilities have to do with making sure our folks are complying with current standards, be they performance standards like auditing standards, helping them implement accounting standards, and so on. So I'm basically the rules guy. So you might see that throughout the webinar where everyone's going to have some great advice, and I'm going to be the one in the background going, that's great, but remember this or think about this kind of stuff. So as far as your question, Kristen, yeah, kind of echoing some of what Mitch said there. If you asked it a couple of weeks ago, I might have a different answer, but after what we saw last week, I'm looking at some combination of, having good information, some patience, and a good line of communication with either, your trusted advisor, your auditor, or your funding sources. Maybe a piece of advice I just heard in a AICPA town hall recently was, maybe instead of focusing on the 24-hour news cycle, let's look more at the 48 and 72-hour news cycle. Last week was a great example of that, where, last Monday, OMB issued a memo that basically paused all federal funding. Then there were immediate challenges. And then By Tuesday, they had a Q&A that clarified, well, no, it's not all federal programs. Then by Wednesday, they rescinded the memo. So it's unclear whether they're going to issue new guidance or what that guidance is going to be now. So I think that's the government we have, maybe not the government we want, but that's kind of how I see this year going.
Thank you, David. Carrie, could you go next, please?
I can, thank you. I'm Carrie Shefchak. I'm a senior manager in our accounting solutions group, which, to give a little insight, essentially I operate as a controller or a CFO for my clients, mainly in the nonprofit arena. So we are responsible for preparing financials, communicating with management, communicating with boards, putting in place best practices, operating truly as an outsourced accounting department, be that from a maybe small organization, 2-player accounting team to a large organization, 5 or 6-player accounting team, and filling the roles kind of from top to bottom. To answer the question that we're leading off with, the biggest game changer, our focus that we're putting out to our clients, as well as a lot of the communication that we've been having with clients, not only due to I heard it described last week was the longest month I've ever had. And I think that speaks to what David had said. There's been a lot going on, but I think even before that, there's been a real focus on financial planning and analytics, which the keywords, it's FP&A. You'll hear that discussed a lot. So it's cash management, making sure that you're compliant, that you are forecasting appropriately. Do you have cash? Are you diversified? And I know the main topics of this webinar kind of focus on some of those. So I don't want to get into too much detail, as I know we're going to touch on it again, but I would say, understanding your budgeting, understanding your cash situation, making sure that your planning is solid and that you're communicating with the relevant parties to ensure that you have that support of the board, management, your financial planners, your accounting, your CFOs. You're making sure that all of the relevant people are at the table and are all informed.
Thank you, Carrie. Amanda, could you go next, please?
Hi, everyone. I'm Amanda Vanetta. I'm a senior manager out of our Madison, Wisconsin office, but I serve clients nationwide. My specialty is not-for-profit tax. So I work with organizations on how to be and stay tax exempt. My favorite thing about my job is to hear you guys come to me with your problems, and we can come up with a couple solutions that let you sleep a little better at night. So in looking forward to 2025, I think, like Mitch had summarized, uncertainty is kind of the name of the game. And how can your organization be nimble and make decisions fast, possibly create some unrestricted funds? I think that's going to kind of be where we see organizations either be successful or not in 2025.
Thanks, Amanda. And finally, let's hear from Melody.
Hi, I'm Melody Bunting. I'm a senior manager in the Madison office as well, specializing in nonprofit advisory services. I have a background both as a CPA, but also as a higher education instructor. And I'm incredibly blessed to be able at Wagner to combine those and do a lot of client training and advisory work and so forth. And in terms of Kristen's question, I totally agree with everything else my peers have said regarding uncertainty. But the other piece I would say is knowing who you're getting advice and wisdom from. On the advisory side, I get so many questions and often hear about the bad advice that person or client was given in advance of coming, and asking us the question. So just because somebody's a CPA, I can guarantee you they may not know nonprofit. Don't take the CPA as an overarching, yeah, we can answer the question, because I've heard a lot of wrong answers.
Thank you, Melody, and thank you everyone for those great insights to get us kicked off. Now that we've painted a pretty broad picture of the 2025 landscape, let's dive in and explore how nonprofits can bolster their internal strength, and we'll start with financial resilience. Building resilience often comes down to having smart policies, adequate reserves, and a proactive approach to risk and opportunity. So let's begin with some immediate steps nonprofits can take. My question for the panelists is, if a nonprofit came to you today asking how to improve financial sustainability, what is the first recommendation you'd give to them? And to get us started here, I'll call on Carrie first.
Thank you. My answer would be doing what they're doing, coming and asking that question and keeping that focus and keeping that front of mind and understanding that, as we've seen, the environment is ever changing. So making sure that your nonprofit is well set up from a cash reserve standpoint. Do you have potentially an established line of credit? Do you have the proper policies and procedures in place? We use a lot of tools to forecast cash. To look at budgeting. I think every nonprofit should have, a budget, not only a budget, but a board approved budget in place, and looking at the cash side of things as well, not just from an accrual basis, from a cash basis. You may be able to forecast a surplus in a given year, but if all your cash is coming in the last quarter, you're going to have a really challenging year. So understanding that budgeting, kind of has two phases, the accrual based and then the cash based, to make sure that you're taking that into consideration. And there's a lot of tools out there that you can use for that. There's a variety of FP&A softwares. There's just, Excel is an incredibly powerful tool that you can use, downloading data from your accounting software into Excel, manipulating it that way. And then there are a variety of softwares that you can use, Giraffe, Fathom, Sift Analytics, Budget, which is with a Y, not in a traditional spelling. Martis are some of the bigger names that we see. So there's a lot of tools out there to help organizations to put that forecasting in place and that planning in place.
Thank you. Melody, could you offer us your perspective?
Yeah, I completely echo what Carrie said about the reserve policy. One of the things we saw very clearly during COVID was those that did not have operating reserves suffered significantly. And at least from our experience, the majority that didn't make it did not have reserve policies. So that's first and foremost in my mind of being prepared. And I realize that now it's, kind of late in the game. So we'll talk about other strategies as well. But that's an important one. And then the other is making sure that you're getting the funding that gives you the flexibility and agility you want. So one of the key tools for that is having a gift acceptance policy. And again, depends a little bit on your revenue structure, but having it easy to access and explained on your website helps users understand what your expectations are and avoids having additional administrative time or time spent with a potential donor that is not well invested time. So that gift acceptance policy can be very simple or it can be very complicated. It depends again on the nature of the organization. But in essence, you want it to spell out what things are acceptable to you, both in terms of cash as well as non-cash donations, and especially when it comes to non-cash. My recommendation is generally keep it really, really small, what you'll accept. And then beyond that, say that it has to go to the investment committee or the gifts committee in your organization so that you can avoid getting gifts that come with a lot of strings or attachments or costs to administer.
Thank you. Amanda, what are your thoughts on this?
Just to kind of piggyback off of what Melody was saying, to make sure that your funding is not the correct kind of funding, but in lots of cases, we have clients that come to us that have received gifts that are restricted, either for specific programs or they have to be used for a certain function. So starting to think outside the box and opening an organization up to the possibility of unrelated business income. Unrelated business income is income that's not related to your exempt purpose. You do pay tax on that income, but it's an option for organizations that perhaps have a lot of restricted funds and are looking for some unrestricted sources, things to do. Do you have space in your building? Is your building not being fully utilized for your organization? Is there space you could rent out? If it's debt financed, you might have an unrelated business income tax that you have to pay on than any rental income that you would earn. But there's this preconceived notion in the not-for-profit world that we can't do anything that generates tax. We can't get involved in unrelated business income. And I'm here to assure you that there are lots of tax-exempt organizations that do venture into the unrelated business income area. And quite honestly, sometimes to generate those unrestricted funds, it's worth paying the 30 cents on the dollar that you're going to pay for tax. There's a 21% corporate tax rate. Then depending on what state you operate in, there would be a state tax that you would incur on that as well. But for organizations that struggle with funds that have some opportunities available to them, that might be a really good way to generate more money for your organization if you find yourself in a position where that's an option.
Thanks, Amanda. David, do you have anything to add?
Sure. I know we've probably, talked about some of the stuff already, but, all the stuff that was mentioned already, where I would probably then recommend is just making sure you have the infrastructure in place to help implement and carry out those strategies. So I'm talking about, the internal controls of the organization, the policies and procedures. And I realize that between, implementing new accounting standards and trying to keep up with regulatory changes and trying to meet your fundraising and program goals, I know a lot of organizations kind of feel stretched to their limits. So when it comes to creating or updating policies, it's easy to push those to the bottom of the list. But having strong policies in place that can protect you from liability, it can help you adopt consistent and clear actions, help you use your limited resources more efficiently, and then help your governing boards provide more effective oversight. So maybe just getting started is kind of half the battle when it comes to creating or updating your policies. So, to get the ball rolling, just maybe start by taking an inventory of the policies that are currently in place, and then, consider what policies should be in place and what they should include. And then once you kind of have a comprehensive list of policies, you can then focus on creating a process for making sure they're updated regularly, or establishing a means of effectively communicating them, or ensuring that they're consistently enforced.
Thank you. These have all been some excellent starting points for strengthening internal finances, but of course, nonprofits also face challenges from the external environment, like shifting donor priorities and the possibility of reduced funding streams. So let's talk about that next. We've all seen the recent back and forth where certain funding cuts were proposed and then later rescinded, and this highlights just how quickly the funding landscape can shift and why nonprofits have to stay nimble. Let's talk specifically about building contingency plans and adapting to donor or governmental changes. My question for the panelists is, how can nonprofits build contingency plans for sudden funding reductions or shifts in donor priorities? Melody, I'll start with you for this one.
First and foremost, I recommend that you always, at least once a year, look at your revenue mix and analyze that revenue mix, the percentages that are coming from different areas, the risks that are associated with it. There's somehow a balance that you want to reach between what's administratively maybe more costly versus the easier dollars in the door, but you don't want to put all your eggs in one basket, is in essence what I'm trying to say. And by looking at that revenue mix, then you have a stronger base. The other thing is, I have found that, traditionally nonprofits want to have every dollar possible. So when they're presented with a funding opportunity, the general answer is yes before asking further questions. From my experience, the other thing I would say is don't just assume that every dollar is the same, because it's not. And that way you can build a base that is more resilient, as well as fostering a community. When my daughter and I had a discussion about this very topic this morning, we both, she's in the nonprofit world as well, we both said the biggest factor outside of government funding is those relationships and that community building and the things that you create there. Because when the donors understand your organization and mission and the passion behind it, there's a whole different level of relationship and commitment to funding.
Thank you, Melody. Carrie, what advice do you have on this?
Building off what Melody is saying, I think the relationships with your donors are key. And I have a client that operates in the refugee resettlement space. And when you think about, this past week and the challenges that that organization has faced, having a strong relationship with your donor base, being able, if you have restricted funds that are set aside for a particular purpose, as you can imagine, if the organization is no longer able to serve refugees and you have donated funding that's earmarked for that purpose, you must go back to that donor base and have that conversation to find out if you can repurpose those funds or if there's flexibility therein. And, having that relationship, having that communication is key. And I think it's important for nonprofits to be able to tell their story and to be able to tell it effectively. They're so passionate, that's what I find with a lot of my clients is, they believe so strongly in their mission and they believe so strongly in what they're doing. They just need to be able to communicate that effectively and, utilize our services, the financial piece to be able to put numbers behind that and explain where the biggest need is and show the difference between, what their restricted available cash is versus, operating cash reserve and be able to communicate clearly around it. So it's having that relationship and being able to effectively communicate with those donors and to the public in general, what your strongest needs are.
Amanda, how about from your perspective?
Yeah, I want to go off what Carrie said, and your 990 should be used as a marketing tool. One of the easiest documents for anyone to access, it's available for public disclosure, is your 990. So if they're curious as to how your organization is operating, they can go on an IRS website to query your organization. They can go on GuideStar or Candid and pull up your 990 within minutes. So using that document to tell your story, to explain to folks how many people you're impacting through your programs. I think lots of times people take the 990 and it's just a report that we're giving to the government. No one's going to really use it. You can use it as a marketing tool. You should be highlighting in your program service section, giving a really great description of what you're doing with your programs. How many people have you impacted that year? So when funders come to you and say, why should I give to you and not another organization? You can provide your Form 990 and you can say, look how many people we've touched this year. This is why you should give to us. Important factors to keep in mind with things that people pay attention to: compensation practices and policies. They're going to be very interested in that. The statement of functional expense. When we give $1, how much of our dollar is going towards the program service accomplishment of our organization versus management in general or fundraising activities, but really utilizing the program service area of your 990 to tell people how many people you are impacting. And the other thing that I would add there too is utilize your thank you letters when you are getting donations from donors. Tell a story as part of that thank you letter. Because of your donation, we were able to assist this many people. Donors like that when they can make a personal connection. I impacted 10 children from my donation. So just making it much more personal. There's so many trainings out there in the not-for-profit world about telling your story, and it's something we got to get really good at.
Thank you. And then finally, David, do you have any insight on this question?
Sure. Yeah, I know we've talked some about this already, with the policies that an entity has. Always keep in mind, there are both explicit and implicit standards of financial prudence in the not-for-profit world, just depending on the type of organization you are and the source of your funding. I think we, briefly mentioned the operating reserve policy. It should address things like, the intended use of the reserves, who has authority over the use of the reserves, how it's going to be monitored, and do you have plans for replenishing the reserve if it has to be used. We may have mentioned it already, the investment policy. If you're a type of organization, especially you have endowment funds, your investment policy, again, address things like what's your risk tolerance? How do you plan to just mitigate the risks that are involved with investing? Again, who's authorized to make transactions and how investments can be withdrawn and spent, and things like how much do you want to keep in liquid assets for immediate use. Back to the gift acceptance policy again. I think we mentioned a lot of gifts, they come with strings attached to them, whether they're compliance requirements or penalty clauses. So making sure that you're, accepting the appropriate gifts, because I think the last thing you want to do is accept a gift and have to give it back, or worse, spend a gift and then realize you're not able to comply with the restrictions on the gift. So, if you have all that in place and just demonstrating that you're a good steward of funds can help bring in more funds.
I'd like to consider the challenges around federal grants and government funded programs, and I'll turn to Mitch to offer some perspective on this.
Sure. And before I get into some some current issues, what I like to do with a lot of the clients that come up to me and ask if they should enter into the realm of government funds is, is it right for the organization, and does it fit for the organization to administer government grants? If you're not aware or involved with administering government grants, you might not know that whether you receive $1 million grant or $50 million grants, you're still required to have the same specific written policies in place. You need appropriate internal controls to ensure that you can comply with all of the grant requirements, increased knowledge of grant accounting and compliance requirements, and those are always changing, and additional things. So it's important to make sure that you take that into consideration and make sure it's in the organization's best interest. Also, most grants are based on allowable expenses, so you're not allowed to make a profit on them. So if you're looking for additional funding to, let's say, build a reserve or pay off debts, you're not going to be able to get that additional funding from administering those grants, because you do have to be reimbursed for the expenses that are spent on those grants. And like I said, another thing to consider is administrative costs that are required to operate these grants. There's a minimum number of items that you need in place. So if you receive a small federal grant, you might find yourself with additional costs that can't be recovered versus if you had a larger one. Or some organizations have a lot of different federal grants and can leverage that administrative burden across multiple grants. So all of that should be considered when you want to determine if you should get into government grants or apply for a certain government grant. I also wanted to say that it's important to work with a CPA firm. And I will say at Wegner, we do provide consulting services. We have experts that help organizations get the policies and procedures in place to make sure that their audits, if you're required to have an audit under the uniform guidance, that'll go as efficiently and painless as possible. So that's something that I always recommend considering it, if it's the right fit for the organization. And if you do want to move forward, really look to an outside consultant to help implement some of the policies and procedures so that the organization is ready for that kind of audit. Currently, I know that we've already talked about some of this, the change in administration. There's been talks about cutting various federal programs or funding, and I do think that it's a concern. That's uncertainty that's out there. However, if you do look at the overall federal spending over time, I was looking at a graph the other day, and from 1950 to now, there's been ups and downs, but for the most part, we have been spending more as the federal government has, and I don't anticipate any major changes to some more of the basic federal programs. So hopefully there's nothing that's going to come up that really causes anyone major issues. But I think the most important thing is to, like we said, be patient and wait for additional guidance when it comes out. As far as the funding freeze that's going on, it's also important to track expenditures related to any kind of work stoppages and any expenses related to contractual obligations. Those may be allowable. So when the freeze is lifted, those costs may be able to be recovered. And finally, I think it's important to do, if you haven't already, a cash flow analysis for the next few months to determine if you need to make any potential operational changes or decrease expenses in certain areas so that you can make it during this time period until the freeze is lifted.
Thank you, Mitch. Carrie, do you have anything to add about funding sources?
I do. I think Mitch kind of pointed out the margins can be slim, on some of these federal grants. So it again becomes important to diversify your funding sources and to look at maybe capacity building grants or unrestricted funding. And I know we've been talking about a lot of these same things, but they're all interrelated, and there are a lot of opportunities to hire either internal or external grant writers, and then it boils down to making sure that you're getting the right fit, getting someone who understands your mission and understands the story that your organization is trying to tell and can help you find either private funders or public funders, or, if you are going into the federal arena, making sure that you're in front of the right audiences, and that when you are ready to dip your toe into the federal pool, that you have, like Mitch said, done the legwork up front beforehand to make sure that you have that infrastructure. And then thinking outside the box, Amanda touched on earlier, that nonprofits tend to stay away from engaging in revenue activities that will cause UBIT. And again, I'd rather have 60 cents on the dollar coming in and paying that additional in taxes than no money coming in. So I think it's important I think Melody said it as well, be constantly reevaluating the various revenue streams and the impact that they have on your organization, and then ensuring that you have the right infrastructure in personnel, in policies and procedures to track and record that revenue appropriately and report it to the various agencies, be they private funders or federal funders. And I think that all comes down to communication. It's communication with your finance team, communication with your auditors, communication with your board, with management, and making sure that everybody's on the same page and working toward the same goal and working to achieve, the mission of your organization. So that's my thoughts. It's not all about federal funding sometimes. Sometimes it's a supplement to it.
Thank you, Carrie. So we've been talking about having a solid financial base, and now staying informed about regulations and compliance changes is equally critical to maintaining your stability. So let's explore that next. My question is, are there significant accounting standard updates on the horizon that nonprofit leaders should be aware of, and how should they be preparing? I'll turn to our rules guy first. David, why don't you kick this section off?
Sure. So thankfully, with regards to accounting standards, and those are the standards issued by the Financial Accounting Standards Board, we're in a period of relative calm compared to the past several years. Probably going back 7 to 10 years, we've seen major changes, such as changes in the presentation of nonprofit financials, revenue recognition models, and leases. So there's none of that on the horizon. The changes on the horizon are more narrow scope and targeted improvements, and a lot of them don't even apply to not-for-profit organizations. So, so from accounting standards, I think we're good for a while. There are changes. Mitch had mentioned that there's a new uniform guidance, which does include an increase in the threshold of when an audit is required. That's going from 750,000 to 1 million in federal assistance expended, and that's beginning with fiscal years that end September 30th of this year. So, along with those increases, there have been some increases associated with state charitable organizations. They have some filing requirements. Some of those have been increased as well. So, like I know Wisconsin recently increased its threshold for when an audit is required to $1 million in contributions received during the year. So just kind of keep in mind, though, that administrative requirements, they still need to be complied with regardless of whether or not an organization is audited. So.
Thank you. David, could you give a quick tip on how to stay ahead of potential regulatory or standards changes? For instance, what resources would you recommend nonprofits watch regularly?
Sure. So I know you'd be upset with me if I didn't say we have a blog on our website as well as events page that has events like this one there. So we do have a blog on our website where we're regularly posting information about updates and that. For me personally, subscribing to various newsletters depending on your role in the organization. I mentioned the Financial Accounting Standards Board. They have a mailing list if you want to keep up to date on accounting standards. The IRS has a tax exempt organization newsletter that you can subscribe to as well. There's a lot of various trade or advocacy organizations as well. A couple that I use, one's the National Council of Nonprofits. We can probably post that website. I think it's councilofnonprofits.org. They've got newsletters. Recently they had a chart front page of their website that has that's basically tracking all of the executive orders and their status and their impact. There's also the Nonprofit Financial Commons. I think that's nonprofitfinancials.org. That's a site for nonprofit finance professionals. And another one that I use that's not available to everyone is the AICPA not-for-profit section. It is an individual-based membership that's available to members of the AICPA, but they do offer webcasts and other CPE that is available to non-members as well.
Thank you, David. Mitch, do you have some perspective on this section?
Yes, I think, and this has been an issue that we've come across for many years, but one of the biggest issues that we continue to find is organizations having a hard time determining whether they are considered a subrecipient or a contractor of a grant agreement. And it's very important because that designation really determines what you need to do to comply with the terms of that grant agreement. The Code of Federal Regulations provides definitions and guidance for whether you may meet certain attributes of a subrecipient or a contractor. However, it is ultimately up to the pass-through entity to make that determination. And the problem that we run into is that many times it's unclear just by the grant agreement alone what that relationship is. So the pass-through entity is required to provide that information to the subrecipient so that they can comply with those federal requirements. But I kind of view it as a game of telephone. Usually when the federal government awards a grant to a prime recipient, so let's say a state, for example, it might get passed down to a local county and then maybe to a city and then end up at the nonprofit organization. So the information that's or the required information that's needed to be passed down is typically clear from the federal government to the prime recipients. But by the time it reaches the nonprofit organization, many times a lot of that information has not been passed through accordingly. So what you should do in this situation is reach out to the pass-through entity and try to get them to make a determination on what they consider that relationship that you have, preferably in writing so it can be documented. And if the pass-through entity won't make that determination or can't make that determination, I recommend that the nonprofit should go through the guidelines or the different attributes for the what is a subrecipient versus a contractor in the Code of Federal Regulations and documents their determination. And currently, bringing this back to the new uniform guidance, it's even more important because during this transition, depending on when a grant has been awarded to a prime recipient, so the federal government awards a grant, that is the dates that could determine whether the nonprofit needs to follow the compliance of the old uniform guidance or the new uniform guidance. In addition, there's a lot of departments that have not adopted or codified the new uniform guidance as well. So it's very important, number one, that you obtain this information and are able to get your pass-through entity to provide that information to you. But then you also have to look at each grant and federal award to determine what are the requirements that you need to comply with.
Thank you, Mitch. I'm going to pivot just slightly, as compliance is really a board level responsibility too. So let's discuss some ways that boards can strengthen governance around financial health. I'm going to pose my next question. I'll start with Melody on this question. What steps can boards take to better understand and address financial challenges facing their organizations?
First and foremost is get informed. A lot of times people have really good intentions in joining a board, but they don't realize what they don't know. And sometimes set the organization up for some issues by that very nature. So there are a lot of good resources out there, including, resources that we support for getting board members trained to at least a basic level. At a minimum, there are legal fiduciary duties that are responsible, and never to scare anyone away, but the board is kind of that final stopgap. And if there are some certain more catastrophic kind of failures, the board can be held personally responsible. So it's important that they understand that role. And one of the things when I'm working with organizations to get better board members or to get a sustainable board is one of the tools that really helps is having a board matrix. Sit down as an organization and define what are those key attributes that you need on the board in terms of diversity of the population and representative of different expertise areas. Accountants and lawyers often have gotten picked on for their expertise, but there's a lot of other expertise that can be a really good fit with your board. And so by developing that matrix, you've looked at the intentionality behind what are the pieces of information that are most important to us and who can help us guide through some of this. Because the average board member is not going to understand necessarily compliance or some of the financial reports, but they still bring important things to the table as long as we have intentionally diversified those skill sets and so forth with that. The other thing I would say is that you find ways to build the collaboration and communication, because the most effective boards in guiding and actually being engaged in the mission of the organization come when they collaborate amongst themselves as well as with the executive director or senior leadership. Too often, the board is somewhat isolated and it's more of a check the box, where they listen to reports and it's more senior leadership that's running and guiding the ship than being directly involved. And in perfect world, the high level, governance should be setting that strategic path. And they're there for that expertise and that big picture and looking for the oversight, not digging into the same details that the staff is. And that's where they can really add value and bring in some key things. We saw an organization during COVID that their board was so actively involved. One, they got a very large gift, but secondly, they had some really good plans already in place for how they were going to assign and use those resources, because they had had a strategic vision before any of the other unforeseen and uncontrollable circumstances hit.
Thank you. Melody, do you have any suggestions or recommendations on training resources for boards that you've seen work well?
Well, again, you'd probably be upset with me if I don't mention that Wagner has a long reputation with nonprofits and supports that community. And as part of that, has 10 nonprofit board trainings that are offered for free. And you can contact Kristen, myself, anybody on the panel, or look on our website. They're there as well for those 10 topics. And that's a great way to get started if you don't have some of the pieces or you want an outside perspective. There's also, David mentioned Nonprofit Financial Commons. I like that one because it's a peer group of your peers. You can ask questions and get responses. And it has different levels, including, looking at board members as well as the financial people. So find some of those. And then you might find something in the niche for the particular type of nonprofit as well that's an authoritative source or a good resource for you. Use those tools.
Thanks, Melody. Mitch, what are your thoughts on steps boards can take?
One thing that we always do as auditors is look at internal controls and the different components of internal controls that organizations should have. And some of it is at the operational level, but there are a lot of internal controls that can take place with those charged with governance. And I think for the most part, a lot of our clients do a good job as far as making sure that the organizations have policies and procedures in place. They're reviewing financial information, following up with any kind of findings, audit findings, or anything like that. But one area that I do see that can get overlooked is a risk assessment or performing a risk assessment for the organization. And when we talk about a risk assessment, we're not just talking about possible risks to the financial statements. It could also include, things like external, regulatory, social, performance, and operational risks. There should be some kind of brainstorming or meeting, and questions like, what happens if we lose this grant? What happens if a specific law changes? What if a person leaves? What if we lose a significant donor? You can go through and really find out some potential risk to the organization that maybe you didn't think about, and look at potential ways to mitigate those risks. So that's something that I would definitely recommend for organizations to implement, is just on an annual basis, having a specific, whether it's board or finance executive committee meeting, to have a written or a documented risk assessment as what could happen to the organization, and so what would we do in response to that to help protect the organization.
Thanks, Mitch. Amanda, do you have any final thoughts on this section?
Yeah, so essentially when I'm looking at your tax reporting to determine, is there anything potentially that tells me that the board might not be as involved as they need to be? Again, not to concern you or like raise any panic, but were anything to be challenged by the IRS, the board that is listed on your 990 is the one that would be held legally responsible. So making sure that your board members are aware of that, and then B, to reinforce kind of what we've been talking about this whole time, policies and procedures, making sure that those are in place. The IRS actually calls part 6 of your return, which talks about governance and policies, the crown jewel of the 990. And essentially they're probing for best practices in your organization. Do you have things like a conflict of interest policy? How are you recording and following that conflict of interest policy? Are you doing it on an annual basis? What do you do if you find a conflict? Written document and retention policies, whistleblower policies. All of these are being queried in that section. And essentially the IRS hasn't said, we're going to audit you if you don't have these policies in place, but they also have not said that they won't audit you if you're answering those questions all no on the tax return. Other things that concern me when I just get like financial information from clients, things like contra expenses. So, expenses that are really a revenue, making sure that boards understand the difference between accrual basis financials and cash basis financials. If you have a board and you're not subject to an audit and you're trying to keep your financial statements on an accrual basis, but you don't understand the accrual basis, you're going to give us some really, really messy financials. So knowing what is the correct kind of reporting you should be doing for your organization, ensuring that your board on a monthly, quarterly, some kind of basis is getting access to the financial statements of the organization. Best practice, let's compare it to the budget. What did we plan for? Because as Carrie mentioned early on, hopefully you've passed a budget going into the new year. Let's see how we're doing in relation to that budget. All of those things are really are things we want to see boards practicing in. We want to see it noted in the board minutes that those things are being looked at. And they're very, very important for organizations. So that's what I've got there.
Thanks, Amanda. Well, we've already covered a lot of ground today, and in our final 10 minutes together, I'd like to shift gears and address your questions. So please continue adding any questions that you have in the Q&A box. You can address any of our panelists individually if you like, or ask a question in general, and we'll start going through those. The first question I see in the box right now is, I think going back to something Melody mentioned early in the presentation. What do you recommend for an operating reserve and how many months of operating income?
Those are great questions. And I love how the panelists today, we've all talked about the importance of understanding your organization. And for me personally, working with advisory, a lot of things are so much better if you're proactive and intentional, including this. So understanding your cash flow, your cash projections, if you will, or the peaks and valleys in your cash, that's going to help you determine what's an adequate operating reserve. Because if you have significant peaks and valleys, that has to factor into how many months or what kind of funds you choose to reserve. Now, the most common reserve is set off of a percentage of expenses, either from the prior year or the budget, or a number of months of general operating, but factor in those nuanced peaks and valleys if that's a significant part of your rhythm.
Sylvie. And please feel free to keep adding your questions to the chat and the Q&A. I'll go to a question that was submitted in advance of this session. For any of the panelists to jump in and answer, please. Do you see any changes coming in the way that nonprofits have to report donations?
Don't, no. If you mean reporting donations when it comes to picking them up on your audited financial statements, Mitch or David, correct me if I'm wrong, but we're going to continue to do that the same way we've been doing it in the past. Where that can sometimes be a disadvantage to some organizations is, if you have a pledge that's going to be made over, let's say, a series of 5 years, accounting standards would say we have to pick that all up in the year that we receive the promise. And so then when you get to tax reporting and reporting it on your schedule of contributors, you do have to take that entire amount into consideration. And it could affect things like your public support test. As a public charity, you are required to have 33 1/3% of your revenue come from a vast amount of sources and to pass a public support test on your tax return. You'll see that reported on Schedule A. So that's kind of where there can be some concern, especially if you've got a small number of donors that are giving you large amounts of money year over year, which is why Melody has reinforced diversified forms of funding, looking at where your money is coming from, making sure there aren't those large concentrations necessarily. And that, again, you can be nimble if that funding source for some reason goes away. But I don't foresee the way that we would pick that up on a tax return would change or in the financial statements.
Yeah, and I can add to that, Amanda. So yeah, nothing future looking, but I will say a few years ago, the FASB did issue an accounting standard related to the reporting of what they call contributed non-financial assets. So that often gets overlooked is, basically the non-cash gifts. And what got the ball rolling on it was an issue related to certain organizations were basically overvaluing donated pharmaceuticals. And then what that led to was a new accounting standard that provides a little more disclosure in your financial statements related to basically non-cash gifts, not only disclosing the nature of them, the amount of them, but then how the value of them was determined. So kind of back to the gift acceptance policy, then, making sure that you are accepting the right types of non-cash gifts, as well as appropriately valuing them, as well as making sure that they're valued appropriately.
The next question is, given the fluctuations of the news cycle and uncertainty that has been mentioned, what are the things that you as CPAs are closely monitoring? And do you have any recommendations for what nonprofit leaders should be looking out for?
Well, I'm going to share one thing related to this that really hit home for me lately is as part of the baby boom generation, obviously it's fun for me to continue learning, but I come from different perspectives, and to realize how much a lot of the practices and especially the donor sources are changing. And one of the questions that came up in a recent forum I was part of was about these large gifts from, the tech sector and so forth. And how do you get lucky enough to get one of those? And it was very clear from the panelists, it's not luck, it's preparation. And so a lot of what we've talked about today is so relevant to all of that. Are you accountable? Can you demonstrate transparency? Do you have that built reputation? All factors of things we've talked about today, but that's your core foundation, that the rest won't work if that part's not solid.
Yeah, and I'll jump in here and just add to that. I think we've talked about it today. It's hard to know what's going to happen, and I think one of the best things that are tools that you can use, just outside resources, whether that's your accountant or your funding sources, just to have that communication with them and provide updates. And then we've also talked about it, just looking within the organization and determining if you need to, where you can get additional funds or cut back on expenses and do other things like that to help get past this period.
I think it's important to, I work with organizations that are more in a desperation mindset, where you're panicked, you're coming from a place of, oh no, I've lost my funding, oh no, this is happening. And it's really easy to get lost in that mindset and to be very focused on, the next, 3 months and how am I going to get here and how am I going to get, my goals. And it's important to take a look at, where do you see your organization in 5 years and how do you intend to get there? And I see a lot of organizations investing in strategic plans that are very granular and have very specific action items and very specific metrics that they're working to achieve. And they're constantly reevaluating themselves, reevaluating their organizations, and ensuring that what they're doing is serving not only your mission, but that strategic plan. And is it helping you get where you want to go? But that takes real control and real intentionality to be able to step away from what I have to do today and then look at what am I doing today that's helping me get where I want to be in the future. So it's changing that mindset and really being proactive and looking forward.
My next question is, what regulatory items, if any, are being considered which could have an impact on financial reporting for religious organizations?
I can't necessarily speak to everything that may be proposed because I don't follow closely all of the legislative actions, and this can vary greatly by state as well as federal government. But I will say that there is still a very strong advocacy and voice for protecting those caveats and things that apply to religious orgs. And we have a very strong religious organization niche within our nonprofit because we have some really committed people that are working in those spaces.
We'll take one final question in our last minute here. How important is it to change auditors, and what information is needed when we send out a notice for a bid for an audit?
You should never change auditors. just kidding. Obviously, with the requirements for procurements related to federal contracts and grants, looking at those relationships is required. And we do recommend that organizations look at potential changes in auditors. It doesn't have to be on an annual basis, but whether it's 3 years, 5 years, and you also don't have to choose, but I think it is important and part of your due diligence to make sure that you are going out and looking for if there's a better option for the organization, and in documenting that and making sure that you're looking at those different options.
There are sample RFPs out there too, request for proposal, that sometimes you can grab, but just to kind of piggyback off of Mitch just a little bit, we do see occasionally organizations can request a change in an audit partner, but stay with the same firm as well. So that's an option as well. You'd get a different set of eyes than looking at it and potentially new ideas. We like to switch up even reviewers of tax returns from year to year, just so there's a different set of eyes looking for potential issues that we might see.
Thank you. Thank you. And thank you to all of our panelists and participants today for a great discussion. I'll be emailing out a list of the resources, including the blogs, peer networks, and other tools mentioned today, along with the recording. So keep an eye out for that follow-up message. Thanks again to our expert panel, Mitch, Melody, David, Carrie, and Amanda, and to all our attendees for joining us. If you'd like deeper training on these topics, please keep an eye on the Insight section of our website, as we will continue to add more resources, articles, and webinars to our 2025 schedule. Make sure that you're on our email list so you're getting those updates. And we certainly appreciate your time and engagement today, and we look forward to continuing this conversation with you. Have a wonderful day.